Hey Brandon, it's good to have you back. A couple of weeks passed by since we talked last time. Let's catch up and talk about the stimulus that has come in finally today or yesterday, the announcement, right? Overnight. And then also dig down a little bit more into some of the companies and the reports. So, what can you tell us about the news today?
Yeah, certainly today the 5-year loan prime rate was cut, which was anticipated, but it was actually reduced more than expectations. So, that loan prime rate is the rate at which mortgages are based off, and so the market, had basically anticipated it would be cut down to 4.55% from 4.6%, but they actually put it in at 4.45%. So instead of getting a 5 bips, we got a 15 basis point reduction. And again, that's the rate at which mortgage are based off, and so I think it's viewed as help to the China's real estate sector. Just obviously, you've had weakness both in housing prices, but also with the property developers themselves. So some support for kind of a beleaguered sector within China. But I think there, for today's market action, there were some other catalysts. The WHO approval of a domestic Chinese COVID vaccine, and then I think you had a little bit of a catch-up rally in Hong Kong based on Premier Lee's strong statement around not just internet regulation, but also support of foreign listings. So net, a very strong outperformance for China and Hong Kong, particularly on a relative basis to weakness you're seeing here in the United States. And even a gain relative. Europe managed to pull out slight gains for the week, but a significant outperformance from the China and Hong Kong markets this week.
Mm-hmm. So we've been talking before around stimulus coming to the Chinese economy, but it never really happened. So is this the one now? And is this really what investors are looking for already? Because of course there has been this discrepancy between talk and action, right? And this is not really quantitative easing, right? It's more like more loans and money flowing into you mentioned the property sector.
Yeah, I think there was the proverbial bazooka. That what we saw post the global financial crisis is not going to come. That it's going to be more incremental support of the economy, but certainly there's been things happening in terms of they cut their VAT. Their VAT has been reduced. They've talked about how due to the VAT reduction, but also tax support, tax revenues are down in China. And that's a sign that that money that would have gone to taxes is going to go back into the real economy. So I think we should expect continued, they'll continue to cut the bank reserve requirement ratio. They're going to ease. We'll see some fiscal support. And there's increased emphasis on trying to raise domestic consumption that I think, the export data over the last, call it 5 months, has been slowing. And that's just as global stimulus is pulled, it means less demand from the world's factory, which is, China. So, again, you're going to see some slacking on the export side. What's going to make up for that? It's got to be domestic consumption. So I think there's going to be a lot more focus on domestic consumption in China over the remainder of the year.
Right. But for domestic consumption, of course, we also need the lockdowns to go away, right? And we see gradually opening up in Shanghai. Maybe takes a couple of more days and weeks. Beijing always at the verge of a lockdown. And so you mentioned the vaccine, like which role do you think this kind of vaccine news could play?
Well, I think the issue for the rationale behind the lockdown policy, the lives first policy, is around the Sinovac, the local domestic vaccines. do have decent, pretty good efficacy rates, but that requires three shots, and I think you've seen some skepticism around the elderly in China on getting the vaccines, and therefore they've come out and said, the government came out and said that the lockdown policy has saved 1.5 million lives just due to where the population from a vaccine objective is. And certainly then the other interesting was they noted that if Omicron had gone through China, it would have overwhelmed the healthcare system. It would have created 15 times the demand for ICU beds as is presently available. So we might not like the consequence of the lockdown policy. At the same time, there is a rationale, and I think we're seeing a little bit of a moderation of the lockdown policy, that I think they're trying to limit the effect on the economy when they can. So we're seeing a little bit of a different situation thus far in Beijing from what happened in Shanghai.
Right, and you also spoke about Li Keqiang now joining Liu He in promoting business activities and also the importance of big tech, now that we see the first earnings reports coming out. And maybe let's start with a more negative one, although I usually say on this channel that I think like the bottom line will not be affected too much by most of the policies and crackdown regulations that I'm seeing, but the Tencent earnings has been quite flat, right? And so what is your take on that one?
Yeah, Tencent, I think we kind of knew going into the quarters it was going to be a tough one, right? Just because of lockdown, due to the lives first. The lockdown policies kind of going to mute consumption. Obviously, no travel, domestic consumption is very low level. But also, if you're worried about a potential quarantine, you're going to hoard cash, not spend it. So I think, Tencent, the expectations were low, but the end reality is that it missed those expectations. And so, you have to take it from the viewpoint of these sell side analysts who are simply doing bottom up work. They don't necessarily think about the broad economy in doing that analysis. It's just kind of bottom up work. And I think my expectations were much lower than the proverbial streets view. And for Tencent, the real weakness was in advertising, that advertisers have pulled back because they see this, this conservatism in households. So if there's going to be less demand, advertisers are going to pull back. And that's, domestic, what to me was, it wasn't all bad in terms of the earnings. The domestic games did well. The international games did well. The fintech did very well. But the advertising really was the culprit in terms of what was a big factor in the miss. So bit of a disappointment from Tencent. Obviously, expectations for Q2 are going to be muted. And I think that's where there's a lot more emphasis about kind of the fall starting, later on this year, post kind of the People's, the Party Congress taking place.
Mm-hmm. Couldn't be the ad spend also be kind of a signal about, let's say, the more slowing global economy, because that might be mostly multinational companies doing those ad spendings and budgets, right?
Well, I don't disagree. I think it's something that for all investors, it's something they should be aware of, is that, for the global economy, global stocks, you're going to have, as this stimulus is pulled, as the Fed raises rates, it is, the objective is to try to temper enthusiasm, to try to get inflation down. And we should anticipate potentially not very good earnings, kind of potentially globally in Q2 for China. What's a little different is, as the world enters this period of tightening, China is actually loosening. They're not pulling the proverbial Band-Aid with their economic support. It's going to kind of come in dribs and drabs. But I do think China is going the other way a little, and that is important to recognize. That I think there's been significant home bias or infatuation with U.S. equities for good reason over the last decade, but it could be time to start looking elsewhere, non-U.S.
Yeah. And on the positive side, we had surprisingly good earnings by JD.com. I'm not too deep into the company, but I was personally just assuming that the lockdowns would really hurt them. And I also saw some numbers from Alibaba, like from kind of the back end, and the logistics are really struggling, but it seems they really pulled it off this quarter.
Yeah, I mean, a hat tip to JD's management for pulling off just a great quarter, despite this difficult macro backdrop. They did well. Now, some of that potentially, maybe some of those gains are due to some of the rules, some of the anti-monopoly rules are kind of lowering the barrier for entry for a JD to compete against Alibaba. We don't know explicitly if some of these gains came from that expanded share of wallet, but net, year over year, they grew top line revenue 18%. It's just a great number. And certainly where Tencent basically missed every mark in terms of revenue, EBITDA, net income, EPS. JD was the opposite. They actually beat expectations. So a strong move there. And certainly, their logistics was a bit of a factor there. But I would say their e-commerce, grew 17%. Versus the logistics up 22%. Logistics is a much smaller component of their aggregate revenue. So good sign. Yeah. Net just a great quarter from JD, and hat tip to management.
Yeah, very interesting, because now that you say it, JD actually belongs to the Tencent ecosystem in a way. The links with from WeChat straight to shopping on the JD platform, but now, of course, also Alibaba needs to open up for JD and the various Tencent companies. Tencent owns a stake in JD, right? And that will be interesting to watch. Do you have any expectations for the Baba report?
So I think for Alibaba, it'll be interesting, where they've spoken about trying to do more internationally, both Europe, through in Southeast Asia through Lazada. And certainly, one of the competitors for Lazada, a company called C out of Singapore, actually had a pretty good quarter. So it's, I think, obviously there's a tough, difficult macro backdrop that, Alibaba faces. At the same time, some of their non-China business, potentially could kind of help fill the slack. Certainly, Ali Cloud has continued to grow. But I think, the net is the core business is the China e-commerce, and we know it's been a challenging backdrop. So my expectations are pretty low going into the quarter. It's next Thursday after the Hong Kong, before the U.S. Open, they'll report. So as well as Badu's actually the exact same time period. It's kind of funny that the two of the big players are actually doing it at the exact same time. It'll be a busy Thursday morning, but I think one thing, Marcel, is these companies are a lot of what's affected them is not the fundamentals, and I think if it's been the China internet regulation or holding foreign companies accountable act or tax loss harvesting, you've had these non-fundamental drivers of why investors have maybe stepped out of the names. And hopefully, we see this performance divergence. I mean, it's only a week or two, but we'll take it. That underweight to the space, that ends up becoming tracking error for managers, and that becomes problematic. So I think if we can get some good earnings, get some good news. Certainly, we're seeing on the China side from the internet regulation. You can see some of these players come back into the space, which would be good for us as shareholders.
Yeah, I noticed Baidu is actually getting quite a good bid recently. Actually, the entire year already. Well, it's maybe a little bit more volatile. It's been also selling off more than the others. But I'm wondering, like, could there be some kind of a regime shift, like with the big generals like Alibaba and Tencent, and like on the way up? Once it is going up, do we possibly see new companies taking the lead there? For example, Baidu, who's also more shifting from the advertisement business to now robo-taxis, to artificial intelligence, many, even the medical sector, so many different areas that they're entering, and possibly even seeing Tencent and Alibaba at some point in time also pivoting in their business models and doing more of that in the future as well.
I think so. I think, Baidu, very smartly, I think, has taken its core China search business and invested an element of those proceeds in new technology ventures. And, I think it's interesting that, the what we're seeing from their EV efforts, the Apollo autonomous driving system, it shows that there's a lot of technological know-how in these companies. And I think increasingly you'll see these companies, if you were seeing it in cloud in a big way, both from Baidu, Alibaba, and others. But I think you're going to see more, we've seen it over the last several years. These firms have incredible know-how in terms of big data and how to leverage that data. And that's a ripe market for those services for these companies. So there was even talk about Tencent developing a semiconductor chip. So I think again, it shows that these companies will continue to evolve, and there'll be, I think, you'll see different companies kind of leverage their technological know-how in different ways. And again, I give kind of Baidu a lot of credit, that they've been at this autonomous effort for many years. And it's funny, they even, they've tried some things that haven't worked, but I kind of give them credit for that. They did a big effort to try to, they called it online to offline, where you basically buy a good and then pick it up in the store. And it didn't go as planned, but that's not a bad thing. I think, try, to see a big company try something, that's where I think there is an entrepreneurial nature to these companies that, potentially the market doesn't really give them enough credit for. So yeah, another hat tip to Baidu for trying new things and investing very wisely in their future.
Yeah, absolutely. And by the way, also Robin Li was part of the meeting with Li Keqiang this week, right? And well, let's touch on another topic again, because I know the viewers are always caring about the potential delisting of Chinese stocks and what has happened so far. Basically, we have no actionable news, right? There was just this one Reuters leak about a potentially PCAOB team actually in China, which we don't know yet if that is actually the truth. What else do I know is, well, we have Li Keqiang stepping out as the second guy besides Liu He, also saying we want Chinese companies to go overseas and do their listing. Liu He also did it a second time. So it's kind of, yeah, it's still the words, but these are big guys saying that, right? And if they lose their face, I don't know if that would really bode well.
Yeah, I would agree. It's very interesting to see this verbal support for foreign listings when you think about the backdrop of HFCAA and the optimist part of me says, hey, this is a great sign, right? That, there's, if anyone would know if a solution is coming, these are the people at the highest levels of the government. And so I think, there's been some chatter from some of our other sources in China about a solution coming. Again, nothing definitive. So I think, we've kind of heard some of this in the past, but the volume of chatter has picked up, and one of our sources is, every weekend he's like, man, I'm waiting for a weekend announcement. And so we'll see if it plays out like he thinks in terms of, but it's in line, with what the CSRC had said, which is by June or July, we think a deal can get done. And I think there is a strong incentive because you do have the potential shortening of the window. So one of the risks is within this bill that's making its way through Congress is to shorten the window from 3 years to 2 years. And I think that would be highly problematic on multiple levels, just from an operational, an actual delisting. I don't think anyone's really thought through how that would happen. And I think it just shows that, we have to kind of temper an element of our enthusiasm with just that some of these, that risk is still out there. And, some element of investors will want to see a definitive deal before coming back into the space.
Mm-hmm. Yeah. Let's use this chance and talk also a little bit more about CraneShares and the K-Web. I know you've been busy traveling around, and your colleagues also meeting investors all over the world, in Italy, for example. So what's kind of the feedback that you get right now? And
yeah, I think there's been some of the data in terms of the underweight to China, and certainly some of just, the US stock market over the last decade has just performed absolutely incredible. So I think, you would say that, for investors from the US or globally, there's been a big overweight to the United States for good reason. But, there's some challenges to the US equity market from a valuation perspective against the Fed raising interest rates. And so I think this under investment is leading a lot of investors globally to try to find potential opportunities outside of the US. And I think, China, as the world tightens, China is easing. And it doesn't mean that there aren't going to be issues in terms of the, lives first policy or the effect a slowing global economy will have on China. At the same time, I think there's a real opportunity, and you can't plant the flag and say the bottom is behind us. I wish we could do that, but I think there's a general more positive reception in our conversations on a global basis. Certainly, I think one of the things from traveling a bit globally is that there's a lot of headline risk here in the U.S. and that's not necessarily a global sentiment. That many countries are highly tied to China, and I always say the U.S. is highly tied to China from both an export and an import perspective. The amount of revenue many widely held U.S. stocks have, and so but some of the political rhetoric, I think, has been a little bit of a headwind. But for a lot of investors, they don't necessarily care about that, and there's potentially real opportunities.
Yeah, I also saw like the China weight in the MSCI World was increased, if I'm correct.
Yeah, so about a week and a half ago, they put out, the MSCI does two big semi-annual index reviews, June 1st and December 1st, which requires passive managers, index funds, ETF managers, benchmarked MSCI indices to rebalance the day before at the market's close. And we continue to see China's weight within the benchmarks increase. So within EM, it did increase from December up to about 30% of MSCI emerging markets is in China today, and that also flows back through much broader indices like the All Country World Index.
Mm-hmm. Great. And also today, NIO got included in the Hang Seng Tech Index, just like we discussed previously. It should also be, well, good news for the EV sector in general, but also more convenient for yeah, fund managers elsewhere to add to NEO in general.
Yeah, 100%. Yeah, that will get implemented. I think it's the third week of June. The actual rebalance for the Hang Seng Tech Index will take place, and certainly I think it's they also separately listed in Singapore this week. So I thought I read somewhere that NEO is the only automotive company globally listed on 3 different exchanges. Which I assume is correct, but I think in general, yeah, NEO, like many U.S. ADRs, is relisting in Hong Kong. One thing to be DiDi, will have its vote on delisting from the New York Stock Exchange on Monday. It's a shareholder vote that is anticipated. It will migrate from a New York Stock Exchange listing to over the counter, at which point it will go through its China regulatory overview. And I think once it gets through that review, I don't know the ETA on that, but I think it's feasible that it will then potentially, it could potentially relist on the exchange. Time will tell. A lot of conjecture there. We don't have any exposure to DiDi because of these regulatory concerns and delisting concerns.
Maybe this will also put an end to all of these negative headlines, because DiDi was actually also the start of this big sell-off, right?
Yeah, certainly the DiDi was a factor. I think what Ant and DiDi kind of get lumped in the same bucket at times, but I think the circumstances are very, very different. But certainly the Chinese regulators could stop Ant from IPOing because it was going to list in Hong Kong, versus there wasn't a way for them to stop. And I'm still a believer that, having met DiDi's management in the past, I was so impressed with everyone we met there, and I think Uber kind of forced a listing on them, that Uber needs cash, and potentially forced the IPO. That's a little conjecture on my part, but I just don't see the folks making a mistake like that.
Sure. All right, Brandon, I don't want to take up too much of your time. Thanks for coming on to the channel again, and let's talk soon again.
Yeah, my pleasure, Marcel, anytime.
If you want to support this channel going forward, please consider to become a patron. Then you also have the opportunity to join our community where we discuss things daily, or you can also just follow me on my Twitter handle _mm85. Thank you guys for watching. See you in the next one.